week. Our next guest expects continued profit margin pressures for the rest of the year. Let's bring in Oliver Chen, Senior Equity Research Analyst at TD Cowen. Oliver, welcome to you. And Gucci's been, I don't follow this that closely, but from what I understand, design, execution problems and all that. So what is this telling us about the broader state of the luxury space?
The luxury space is somewhat fragile right now, especially because China macros, we're out with a report this week in terms of what's happening in that market, housing and consumer confidence. But specifically at Kering and Gucci, there's a creative change. So we expect the numbers to continue to be down 25% for the rest of the year. We're also worried about the handbag cycle, and consumers are going towards quiet luxury. That's hurting logo players such as Gucci and others. At the same time, there's been a creative shift, and so we're waiting to see in terms of stores and changes. So in luxury, we've had winners and losers. Right now, in terms of stocks, we're quite selective. We recently downgraded LVMH, and we're recommending Cartier or Richemont Group. Generally speaking, a much better jewelry cycle that benefits Cartier, and a much tougher time with handbags and softer luxury goods as well. At the same time, Gucci's having some Gucci-specific problems because it had grown so much in prior years as well.
I mean, where else are you going to hear about the handbag and the jewelry cycle today, right? I mean, this is what I love. So, Oliver, at the same time, you probably saw all of these memes that were all over TikTok and Instagram. It made me chuckle because, to me, we already knew this, but I guess it's always new to people who are reminded of it, that a lot of these logo handbags and everything, there's a huge markup. They're just kind of average product churned out of China and sold with, a huge price spike. So what did the flood of those videos tell you and mean for both the consumer and the way that this kind of trade war is playing out?
Yeah, handbags and fashion is a tough place to be. Apparel is a tough place to be because of the prices. Also, you have to stay cool and culturally relevant. It's always been true that the cost of goods sold is very low, and these companies spend a lot of money on marketing and creating imagery. So part of the problem with Gucci is it has very elevated high quality product, but they need a fashion designer that brings more drama. And the consumer is paying for that emotional lifestyle connection. In our survey work, we're seeing certain brands uptrend this way, like Cartier and Hermes, and other brands such as Gucci downtrend. But the name of the game with TikTokification of retail, as you know, Kelly, is a lot more transparency to the consumer. So consumers are getting smarter than ever before in terms of realizing that the material cost of goods sold is quite low.
But what does that mean? Like, is that enough to downgrade an LVMH? Or, because what is the consumer going to do? Say, I no longer want that logo handbag?
Well, these businesses are in the business of creating desire. So part of this is real innovation with culture, with music, at the same time, quality and heritage. You look at Loro Piana, Brunello Cucinelli, Hermes, that's working. LVMH is massive. It's one of the largest market cap companies in Europe.
Yeah.
In part, that's a tough comparison overall. And it's more soft luxury focused. We're in this mood, in this moment, where jewelry is a better value, in part because these handbag prices have gotten so high.
Yeah. As
you know, Chanel and Birkins can be $10,000 plus, and some of the entry-level LV bags are around $2,000. If you think about Cartier and jewelry, you can get that for closer to $2,000. But we're recommending Walmart and BJ's too, in terms of like my overall coverage.